Blake Boss here, folks. Today we're going to be talking investing. We're going to be looking at how the average investor can take advantage and beat Wall Street. So a lot of variables put the beginning investor at a disadvantage, but there's one way investors can easily invest on the cheap with little effort, beat the pros, and avoid the common pitfalls facing beginners or people with a smaller amount of money to invest in the market. And what is this? Well, it's direct stock purchase plans. I'm going to get into those later, but first let me explain 4 reasons why these are so great. So number one, most investors aren't able to regularly invest over time due to high transaction costs and account minimum requirements. So in order to qualify for the low transaction costs that many people on Wall Street with those higher amount of monies to invest have, investors have to have a lot of money and therefore can't meet the minimum balance requirement needed to get those low transaction costs. That prevents them from investing regularly over time and leaves them at a disadvantage to the pros. Direct stock purchase plans often only charge $1 or less for monthly investments. So if you have less than $10,000, you'll be hard-pressed to find a deal like that anywhere. Number 2, attempting to time the market. This is a problem that many investors face, beginners and experienced. So little knowledge can be a dangerous thing and frequently puts new investors at the whims of powerful psychological forces they're ill-equipped to deal with. These direct stock purchase plans, when you set them up to regularly invest over time, prevent that. It's out of your hands. It's going on no matter what. You don't have to think about anything. Number 3, failing to reinvest dividends. Unless an investor has read some investing books, they most likely have no idea how important reinvesting dividends is over the long term. So we have this little chart we put together for you right here that kind of shows the effect of reinvesting dividends. So we're looking at the S&P 500 here, and over a 10-year period, we have 102% return for those people that reinvested the dividends. Those that didn't reinvest them received 65%. So the dividend people that reinvested beat the folks that didn't by 57%. That's huge, folks. Got to reinvest those dividends. You're leaving a lot of money on the table if you don't do it. Number 4, though, being too intimidated at the prospect of buying a stock. So let's say you're getting started investing. You got to open a brokerage account if you do it the traditional way that Wall Street would like you to. Brokerage interfaces are very intimidating for people that aren't familiar with them. You have things like bid-ask prices, the different order types, and ticker symbols. So I brought a few examples here. So if you look at the E-Trade interface, try to tell my sister what kind of order she should put in here. Really complicated. Next, we have Trade King here. Try to tell my buddy with little to no investing experience what duration he should use when he's trying to buy his first stock. That's really intimidated. With direct stock purchase plans, it's really easy. All you do is you log in, you put in your personal information, you link your checking account, you select what type of investment plan you want. Do you want to reinvest those dividends? As we highlighted, you definitely do, and you can select if you want to do the monthly investing option. And that's it. You're good to go. You're saving for retirement. You're thinking about the future. So takeaway here, folks, my grandpa started a direct stock purchase plan for me over 10 years ago on Microsoft, and that really got me thinking about investing and saving for retirement at an early age, and it was great. You don't have to feel like you need to invest every month with these direct stock purchase plans. You don't have to do that. You can just reinvest the dividends, and it's a great way just to get started investing and saving for the future. I put a table below of some of the companies available to invest with these plans at America Stock and Computershare, and you can link to those websites there. Investors can also visit Vanguard's site, the ETF operator, and invest in their ETFs at a very low cost too, although their minimum is $3,000. So if you don't have that much money saved up, you might not be able to do that right away. I still use direct stock purchase plans myself because I think they're great and help me avoid poor decisions, and I'd highly recommend anybody that's looking to get started invested to check them out. That's all I have today for you, folks. Thanks for watching, and Fool on.